What is going on, everybody? It is January 10th, 2024. Daily log episode over NQ, the trade review, kind of a overview of the live session today if you weren't there, the trade that was taken, and then everything that unfolded after. So let's go back now that we're rolling into Thursday and rolling into CPI. What was the expectations and the analysis from the beginning of the week? It was to look for higher prices, right? And that was due to a few things, which if we go all the way back out to the monthly time frame, this was, at least in my opinion, the huge kind of clue to why we should see higher prices. Just the overall order flow of the monthly time frame, right? We've been expanding higher basically since the birth of index futures, but in here, made a higher low, displaced higher, dropped down into this fair value gap, displaced higher, got above an old high, and got above an old SIBI, which acts as an inversion level, dipped down into that, and then we expanded away. So this is an example of the concept power of three, where it's open, high, low, and close. And you're anticipating, if you're in a bullish market, you're anticipating the open and the low to be set in the opposite direction to where the monthly candle is going to close at, right? So monthly candlesticks are very important if you're looking at the calendar and looking at the whole month. If you know where you're at, we're in the second week of the month. So the first week, we're manipulating, setting the low of the month inside of an inversion fair value gap. These down close candles will be your bullish order block to attack the buy side liquidity. So that is the whole kind of premise to start off the week. And we go down into the weekly, we see the SIBI here, extend that across. It's something that we're going to have to look at tomorrow going into the session, especially with CPI. Even these old highs back here, it's something to keep an eye on with CPI. If it really wants to expand and gravitate a lot tomorrow, like CPI does sometimes, then you have to look out for these higher premium levels. Last week, power three, you're just setting that low of the month inside of this bullish PD array, which is the fair value gap. Going into the daily, same thing, set it inside the discount from this dealing range low to high inside of optimal trade entry. And right from the start of the week, it was just off to the races. So today, we didn't quite close above, excuse me. We didn't, actually we did. I'm sorry, that is my mistake. So this now becomes a inversion for value gap on the daily. This is kind of one of those situations where I'm pretty confident, very confident that we're going to reach for the buy side liquidity. Obviously, this whole week has been bullish, but now at this point, I don't see anything to the left of us that's going to oppose price or stop price. There's no bearish, order blocks for value gaps. Small inefficiency here, but to me, it's nothing. So we've now created a new bullish PD array. If we dip down into the inversion tomorrow, that's going to send price higher into the buy side liquidity. Looking at the 4 hour, same thing here. We closed above this SIBI. So tomorrow or today, you can extend that out to your right, and you can utilize really, if you're looking at it, you just want to utilize in this example the 50% to 25% of that inversion. And if you can get something coupled within it, like a fair value gap and order block, it's even better. So the premium end, this 50%, and we could call that the other 100. So those are the three levels I'd be looking at to attack the buy side liquidity there. Let's go down into a 1 hour, refine that one to here. You can see we closed above it. And we dipped down into it today. Look at where the body is closing. Above the 50%. So even though we wicked down, this was a mitigation block on the 1 hour, because I'm sorry, that's actually a breaker. I was looking, think of ES. We have a low, a high, a lower low, then a higher high. Last up close candle. So you have the inversion, the mitigation block or breaker, dips down into there, and then we rally away from price. I talked about on stream, I didn't stay on there long enough, nor did I put on the second trade that I was annotating. I was fairly adamant about being bullish today. I did have some concerns with CPI being ahead of price tomorrow, where sometimes that can put price inside of a range, just consolidational, seek and destroy, and I don't want to be a part of that. So I was fairly happy with the scalp today, even though it was in the complete opposite direction of where the daily range unfolded. It was still profits. So being right or wrong, it's really not a thing as long as you're profitable in the end, right? Looking at the 5-minute here, I was annotating a few things. This bullish breaker here, even though we wicked through it a few times, if you're looking at the bodies, and even the 15-minute was kind of supporting that. I was talking about this fair value gap here. And then this down close candle there would be your bullish order block. And I talked about how this would be market maker buy model, the original consolidation, or at least the buy side liquidity was the main focus if we were going long in here. It was just a little bit sloppier in the delivery than I expected. And that's the reason why it was past the silver bullet. The work was already done for at least me for the day. So remember, I sold short in here to tag the sell side liquidity. We go down into a 1 minute. I'm gonna have to clear all this. It's gonna get too messy. Just a quick recap. Sorry, my voice is really, I guess, fickle today. But this inefficiency there, you can see I sold as soon as we tapped into it. I was looking to short just beneath the sell side liquidity. Came back up into it again. Good example of a reclaimed fair value gap. Dropped off lower. We extend this out to your right. As soon as we closed above it, it becomes an inversion. Inside of this as well would be a bullish breaker. This last up close candle. You have a low, a high, a lower low, then a higher high. Buy side liquidity was resting here. Rallies higher, gets above an old high. Last up close candle here. I actually didn't notice this in real time. This is it's just funny in real time. You may not notice all the PD arrays you do when price is still and not doing anything. But pretty clear mitigation block there. And why is that a mitigation versus a breaker? Because it doesn't have the same pattern as this. You have to look at the pattern. Mitigation blocks are continuation compared to breakers where the reversal. There's a sell stop or a buy stop run, right? Underneath that low that creates that pattern. And you see in here, we don't have that. So just a little tip there. Dip down in this fair value gap there. Mitigation block. Rallies above buy side liquidity. Then here, I was trying to probe along. I think even on the 2 minute, I was inside of this. I did say if you were entering into this long that your stop loss had to be beneath at least the 15-minute fair value gap. But this was a little bit deeper run or retracement than I anticipated. If you extend this last down close candle, that is your bullish order block inside of a pretty deep discount relative from this low to that high. We dropped down into there. Took a little bit of time. You're moving into lunch hour. And then it's just kind of off to the races. So I think in here was really, really favorable. The shorts, the longs, whatever you preferred. As long as you're able to make something, you're consistently able to see one little price run, especially on a 1 minute time frame. If you're new to the 1 minute time frame and reading it, I can understand where getting lost inside of this time frame is easy to do. But if you study it long enough, you start to see the phenomenon and how to utilize higher time frames and move. Like I've worked my way from a monthly down to a 1 minute, but everything's fractal. It's still the same thing. It's knowing where you're at. But if you can just capture a small run in here, you know, once, twice, 3 times, 4 times, 5 times a week, right? If you could just capture something like this where you slowly get consistent, you slowly build up that confidence where you can start running for a little bit more. And it could be any one of these. I mean, even from this breaker inversion up to just above that buy side. If you want to hold on to the original consolidation, there's that one. You could do this little run there. I mean, shit, there's even in here this little run from this fair value gap above buy side there, above buy side again. So it's all about the way you view it. But I think the 1 minute time frame gives you very good opportunities, especially when you're learning and trying to adjust to these concepts, because you can get immediate feedback and see what you're doing right versus wrong. Only downside is over trading and not placing yourself in the correct environment. So that all comes with experience. I want to touch on the dollar index as well, real quick. It's still stagnant, meaning it's sideways, which dollar is a inverse correlation to index futures. If it does stay inside of consolidation, it can allow index futures like NQES, YM to move freely. But if you have this in confluence with that in terms of intermarket relationships, it really favors it. So if dollar can drop off lower tomorrow, which I suspect it will, then that's going to push all the index futures higher. And that would be a really good confluence. And really the main focus for me is the weekly time frame. That's the parent time frame, and we're moving into Thursday now. I would like to see an expansion away from this going into tomorrow with CPI and then Friday. So just to reiterate, we have the bearish order block there with the fair value gap resting underneath it on a weekly time frame. It's a weekly time frame order flow, right? Inside of dealing range high to low, inside of a premium above 50%, we expand towards the sell side here in there. Okay, so that's what I'm anticipating tomorrow. Obviously not everything at once, but I would like an expansion lower. And I think that's it for today's video. Until tomorrow, good luck and good trading, everybody. Be safe.